my vest on here because it's a bit cold outside. And today we're going to talk about the November 17th supply and demand report that came out yesterday, and the production report linked to that. And then I'm going to go through a few slides on some things that are important, either building around that or maybe some follow-through dynamics. And we'll share a little bit of that, and then I'll come back to you. What I'm going to do is go onto some charts now. So I may intermittently came back and say hello and look at you. I may not, but let's start the presentation. We'll move through this, and hopefully you'll find it of interest and of use. So let's begin without further ado. Again, I'm Mitt Goblish. I'm the broker here at the office in Royal. Alan Heffling, who you often hear on this report, is in his new office in Marcus. So hopefully I'll be able to be in front of you on successive months here. So let's go ahead and move through some of this. I did want to mention one thing, and that is most of us that here and out in your marketplace really follow the fundamentals closely, because that's the baseline of what we do and where our capital goes. And from a pure economic standpoint, fundamentals is nothing more than production, distribution, and consumption of the goods and services. We have suppliers and we have consumers, and we have a lot of players in between and a lot of moving parts in between. And my only comment here is a way of softening the impact of an oversupply end or an over demand end, but an oversupply end, which we may be concerned about here. Way of softening that impact of an oversupplying environment is often by increasing demands on the mid and downstream side. It's just a comment, just a general comment. So my suggestion is, if anybody listening is involved in long cash corn in the field or in the silo or in the elevator, and you're watching on the sidelines here, yesterday's balance sheet on corn, a big balance sheet, got bigger, and it would have been bigger without softening that impact via increased demand. That's all, just a comment. So we'll move forward. Yesterday, pre-report, and currently, and even about the past 6 or 8 months, the corn and bean balance sheets, the corn and wheat balance sheets have been very sensitive and fear-oriented on the supply side. And on beans, we got a little bit different scenario. The fear or the sensitivity there is on the demand side. And those are the key parameters by which yesterday came out, and numbers either impacted or did not impact marketplace conditions. And we'll talk about that a little bit. Let's take a look at the numbers that came out yesterday on production. You can see it there. Let's focus on over here on the column, the left-hand column, estimate and last year and so forth. But let's just focus on the number 14.5, 14.6 billion. Obviously a very high acreage number versus the last report and last year. And beans came in pretty much par to a year ago. The corn balance sheet, what does that show us? It shows us that we increased demand. We increased rather supply by 298 million, almost 300 million. And we took half of that out on the domestic and export demand side. So that's what's the methodology and the madness of the point I made earlier is if you increase it by 300 million, reduce it by 150, your net's around 150, which is what the demand or what the balance sheet increased. And I want to just go back here a minute because I think we missed a slide. Now you got corn and soybeans. Okay, we'll continue on. Beans, there's the same number. That was nothing probably but an internal rounding error. So basically the balance sheet is even to what it was last month from the USDA. And we got a little bump last month in terms of taking about 50 million bushels off the end game. So again, that's demand oriented. That's the sensitive part of the bean balance sheet. And on corn, it's oriented towards supply and big supply. Wheat, there you can see pretty much a neutral balance sheet. We took 25 million off the end game based on more exports. Here's the competition. Here's the competition. When we're talking about offshore competition, here they are. I'm not going to go through all those numbers, but take a look at who they are. You know, we know who the supply side competition is. It's South America, a little bit of India on the bean side, on the protein side, and on corn, the South Americans and China. And we know who the demand side, the consumption side, big boys are, China and Mexico. I want to talk a minute about our competition out there, being that I'm assuming most of the people that are listening to this are commercials. They're commercial oriented. They're in the supply, the production and supply side of grains or livestock. And let's assume a minute who our competition is. And I'll ratchet this down a little bit, but the competition uses a concept called algorithmic trading. And I'm not insulting anybody's knowledge of this, but I just want to tell you what algorithmic trading is. So when we say the trade or the traders, algorithmic traders, who are they? They use automated trading systems, okay? And you can see and read that there. But I want to go down a little bit and say, well, who are these things? Who are these algorithmic trading systems? They're automated. They don't have any emotion. They focus on asset value. The vast majority of them, I think about 85%, are trend following. They're not leading the price. They're following it. They're speculative in nature. So they're on the other side of the stadium. They're on the other side of the field from you folks are, that are the commercial hedgers. And they have a very high risk tolerance, okay, in their ownership. So I just want to briefly talk about, you know, let's bring this down a little bit and talk about who these people are. Let's take, for instance, the managed money, which are the speculators, the algorithmic traders, the systems traders, and the non-commercials. But they're one of the most important non-commercials. The non-commercials being the speculators, okay? And why am I showing you this? I'm showing you this because the managed money is very influential in where the asset price of the grains go, especially after we got the balance sheet numbers yesterday. And here's an example where they were last week. They're about 200,000 contracts short the managed money, and that was made up of 200 long and almost 400 short. That's where it came from. So their bullish sentiment, their ownership on the long side was about a third. And that may be important, that may not be. It certainly is important on trends, and you can see on the top side the little chart there that says, okay, well, what happens when they get to be 33%, or what happens when they get to be 60%? So keep in mind what that means. And there's a bullish sentiment for beans by the managed money, but the managed money is the big player on the opposite side of the field from you, the commercials, that is generating asset value to grains via algorithmic or system trading. That's what you need to be aware of. Let's take a minute and look at just some of the charts. I want to take some of the charts and I want to show you some of the things that the algorithmic trading systems will look at. And here's the corn chart. And everybody knows that the corn chart since late August has really been flat. And you can see that on the chart. What it shows is we've got a flat range on the candlesticks. We've got a flat range on the exponential averages, which are the blue and the red average, which dictate trend following oscillators. We've got a flat range on the linear regression, which is the three blue lines coming in and showing where that price channel is. And we've got a flat trend on the bands on the north and south, which are volatility bands. So what does that show us? What that shows us is that we've crept up in a neutralized manner over that whole time period of where the managed money is putting their capital and how they're putting asset value or taking asset value out of the marketplace. So my only point on this is yesterday's impact of the corn balance sheet by raising the end game is going to impact where the money goes and how the ownership goes potentially one way or another on this corn chart. And I'm not saying it's going to go up or down, but what I am saying is you can see basis where this bullish sentiment is, for instance, on the managed money, is where the impact is, and so forth and so on. So yeah, we're in a channel range. We see an upside and a downside, but underneath we show a MACD, and that is indicative of where the private money's going, or where the speculative money's going, and following trends. That's what I want you to take away from here. And we can look at the bean chart, looking at the same thing. Okay, we've got bands, we've got volatility bands, we've got oscillator bands, and all these different things that are moving around are showing us not necessarily indicative of technical prowess, where something might go from a historical basis, where it might go based on systemic trading, and how the systems trading approach will add or take away value from an asset. Okay, and wheat being the last one. So my whole point is here, you saw three charts. You saw three different differentials yesterday of where the balance sheet's going. You saw how ownership is of managed money being the biggest speculator and competitive against the commercial side in terms of a near zero net sum game, and how that impacts. So it's not always driven by fundamentals. It's driven by where the capital goes, and usually by managed money. And I just want you to be very cognizant here as we finish up, that volatility is a very critical characteristics and configuration aspect of price asset value in commodities. And volatility, and I'd like you to read this, that options volatility occurs when underlying futures price fluctuates. Prices move when the expected value of the underlying futures. Okay, so if you're buying a corn option, it's the futures is the corn futures is the underlying asset as a result of real events, expected events, or rumors of events. Volatility is the rate of events. Volatility is the rate at which the price increases or decreases for a designated set of returns over a given period of time. So what volatility is, more volatility means that you're going to have an opportunity for a wider, stronger price range over a shorter period of time. Less volatility means the opposite. So it's very important, especially when we're talking about corn balance sheet, where prices might go, what the charts are going to tell us, where capital might go, real events, geopolitical events, rumors, all this stuff gets bundled in and builds volatility in. And that's where managed money goes and puts their assets in terms of valuing or devaluing assets. And that's extremely important, because the first thing we want to do when we hear something like yesterday on corn is going to have 300 million bushel carryover, that, oh my goodness, this thing's going to fall out of bed. The volatility in the managed money systems are going to determine where and when and how that happens. And that's going to be reinforced or not reinforced by the commercials on the other side of the field. And that's the way it works. So that is what I wanted to talk about. And I didn't approach this on what I think prices are going to do or where prices are going to go. I approached it in terms of, this is what we got. These are the cards we've been dealt. This is the system we have. This is the foundation we have yesterday from the new balance sheets. Now, where does this go from here, and what are going to be the drivers? And you got to follow the cash. You got to follow the cash, and you got to follow the capital. And the capital is going to be reconfigured as we move through this by the managed money in terms of where they're going to put it, either valuing or devaluing that asset based on volatility, primarily volatility, and trend following. Okay. And we've got a new phone number here at Comstock. It's 712-227-1110, 1110. The toll-free number remains the same at 800-242-5014. Again, Mick Goblish here. I would appreciate calls from you on any questions you have on the presentation, and we can expound or expand a lot more on it at that point in time. I just wanted to give you a nutshell idea of what came out yesterday and what I thought, and how I might see capital reconfigurations or cash moving around by the managed money and the speculation in terms of supporting some of these dynamics. So that was it. Good day to you both, and thank you for taking some time to hear our webinar. Good day to you both. Safe weekend.